right, guys, welcome back to the Mogul Marathon Real Estate Podcast. I'm your host, Yannick Cudjoe-Virgil, and I'm super excited for our guest today. Our guest is Kent Ritter. Now, Kent is a former management consultant, corporate executive, and startup owner. After successfully exiting his first company, Kent turned his focus to real estate. Now, Kent is the CEO of Hudson Investing, a multifamily investment firm which helps busy professionals scale and diversify their real estate portfolio with cash flowing, wealth building assets. Kent, thanks for being on the show.
Hey, Yannick, thanks for having me, man. Happy to be here.
So, give us a little bit about your backstory and how did you get to where you are today?
Sure. Grew up in the Midwest in Indianapolis. It's where I live now, where we focus a lot of our investing. Um, Went to college, studied finance and econ, and came out of school in '07, kind of right, right ahead of the Great Depression or the Great Recession. And so went into management consulting, ended up through that time helping a lot of businesses figure out how to um, how to solve problems that they couldn't solve themselves, right? That's essentially what we did. Flew all over the country doing that. So I did that for about 12 years through some pretty interesting times and learned a ton. Learned about you start seeing uniform trends about like what works, what doesn't work, right? For businesses, what makes them successful, what makes others fail. um, Started a management consulting business in 2010 with several partners, sold it at the end of 2015. That's what really kicked off my real estate career. I took capital from that and started investing in my own real estate deals. At that point, I was trying to find my way. I was doing fix and flips, buying houses on contract and building out a note portfolio, build up a single family and duplex rental portfolio. But none of those things really fit for me. None of them really fit my goals. And in that time, I had gotten into like crowdfunding and was investing in deals through that. I started making entries with, deal sponsors, learning about syndication, started investing passively in other people's syndication, which is learning about multifamily and saying like, wow, I think this is the path to go down. This is scalable. It's got better tax treatment, and it's something that I think really there's going to be a long-term need for and good returns. So really start focusing on multifamily in 2019, after doing a bunch of deals on my own, and passively investing with a lot of other people, decided to form Hudson Investing to focus on doing our own deals and bringing our own investors into those deals to be able to pool our money together and buy bigger, better assets than we could on our own, right? So really 2019 was that shift to start bringing in other investors doing bigger deals. And then from then we've really been rocking and rolling, and we've built up a portfolio of about 994 units at this point and continuing to grow.
That's great. What a great story. So let's take it back to your company days when you successfully exited the company. What were the biggest lessons that you've learned from exiting that company prior to getting into real estate?
Yeah, that's a really good question. I mean, it was a true startup story, right? It was, I mean, five guys around a kitchen table at the start. We were taking conference calls from the guy's guest bedroom, and then we grew that over about a 5.5 year period to 95 employees and about 30 million in annual revenue. And so we had substantial growth over that time. I mean, where we went from like a team of 5 to 10 to 25 to 50 to like 90, and so a lot of growth. So a lot of lessons just around people management, kind of organizational structure, how creating culture. Um, a lot of the lessons from that business were really around how do you set up set up the structure of a business, right? So that it can scale and it can be successful. And that means from like accounting to HR to marketing to all the different functions that you need, right? And how do you set them up in a way that they can, because we made a lot of mistakes along the way. So it's like learning from those mistakes and learning about, okay, well, that worked when we were, maybe 5 million in revenue, but it broke when we got to 10 million in revenue, right? So how do you build it from the start to be able to scale up and up? And you're always going to have those moments and hit those plateaus, but at least I've been able to take a lot of those lessons learned. So a framework that I put together, because I think a lot of it comes down to the people around you and your team. And I think that that's one of the biggest things that companies struggle with is hiring and then retaining really good talent, right? I mean, the most expensive thing that you'll do is to hire and then fire. And so the framework is kind of 4 things. It's culture, context, fit, and feedback. And what I mean by that is the culture that you've developed within the company, right? How do you create an environment that people want to work in and that people can grow in, right? I think it centers around respect and it centers around accountability. But just creating that work environment where people are excited to be there, they feel valued, they're being held accountable, right? They're growing. I think that's extremely important. The next one would be context. And this is where I saw a lot of companies I was consulting for go wrong, because they would have people that, where each person's job depended on the other person, but the person at the beginning of the line didn't understand how what they were doing affected the person at the end of the line, right? So the context is taking the time with your employees to really share with them the importance of their job and how their job fits into the bigger picture and the global success of the company. And as much as you can, even tying their compensation to the global success of the company, so that everybody's incentives are aligned. But that little thing, I think, goes a really long way of just spending the time to help people understand how they fit in to the larger puzzle and the impact that they can have, and how when they don't do the things they're supposed to do, how that affects everybody else down the line. Right. The next one is fit. So I'm a big believer of, like, you want to hire slow and fire fast, right? And so fit is critical. I think too many people hire for the hard skills, the technical skills, right? You hire somebody because they're a whiz at Excel or because they've got great real estate experience or whatever. All of those skills can be taught, right? And the things that you can't teach are the soft skills. It's the thing, what's their emotional intelligence, right? How do they deal with conflict? How do they naturally, like, what do they naturally gravitate toward and are naturally good at? So I love personality tests. And a personality test is part of our hiring. We have that integrated into our hiring and onboarding process so that we can really evaluate that and kind of see behind the resume to, like, just naturally, where are their strengths and where are their weaknesses, right? Because you got to get the right people in the right seats. And a lot of that starts, I mean, some of it can be taught, but a lot of it, I think, just comes naturally. And then the last one is feedback. I think that mostly managers do a terrible job with feedback. And I think managers do a terrible job with feedback because it's uncomfortable, right? It's uncomfortable to deliver a hard message to somebody. And I think we do a disservice for a lot of our employees by avoiding that discomfort. But I mean, I think a lot of people think that, oh, we don't want to hurt the employees' feelings. We don't want to have an awkward situation, right? But really, it comes down to us as managers not wanting to be uncomfortable. It's us that we have to get over. Okay, it's not about the employee. It's about, we don't want to be uncomfortable. We don't want to be in that tough situation. We got to get over that, because if we don't, our employees are never going to grow. And so you got to give good feedback. You got to take the time to give good, positive feedback. You got to take time to give constructive feedback, and you got to get past the fact that, you're going to feel awkward about it. Because I think if you approach it in the right way, it's the only way people change and the only way they're going to grow. What you don't want to end up is a situation where you're blindsiding somebody because they think they're doing a good job, and all of a sudden, they're on a performance review or they're getting fired because they're not performing and they had no idea because nobody told them. So those are the things when you think about, like, building a team and keeping a team and scaling up a team, that I think are some of the critical items. And I think that's That's the key thing when you're building a business. Is it's not how you do things, it's who you put around you that then can go out and do those things, right? It's like the book Who Not How. You shouldn't be asking how do I get this done? You should be asking who can do this for me. And that's really how you create leverage.
That is a perfect framework. I'm really impressed with that, and I wish that we can just rewind that and go back and just play it over again.
Well,
Because like entrepreneurs today typically struggle with scaling and actually growing their business. A lot of times when you start off, including myself, like you get busy working in the business and get
mhm.
distracted in the about the long-term goals.
Yep.
But actually sitting down and creating a framework to scale on, I mean, that is a perfect, honestly, that is the most perfect
Well, good.
framework that
I
I've
hope it's
heard.
valuable to you, man. I mean,
It
take it and use it. It's come from a lot of my own lessons and working with a lot of other businesses. I think fundamentally where a lot of entrepreneurs go wrong is they think about the business as themselves, and they don't think about the business as truly a small business. Like especially real estate entrepreneurs like us, where maybe you're a syndicator, right? And it's kind of, at first it's just you or you and a partner, and you're kind of doing everything. But for some reason, a lot of us view that differently as any other small business that you would start, right? Maybe it's a small business that's, a marketing company or a consumer product company, whatever. They fundamentally, a lot of things are the same, and we need to think about it in that same way, because those businesses go out and they're like, oh yeah, I need accounting and I need marketing and I need sales. I need all these different functions, right? But I think as syndicators, like we don't put the business in the same bucket as that, right? I really do think that you got to think about it as a small business, not as anything else, not as it's like you and a friend doing real estate investing, right? If you want it to last, it's got to be a small business. It's got to have the same pieces.
Yeah, I 100% agree. In the world of syndication, there is so many moving parts, and when you're doing more and more acquisitions, your time gets spread extremely thin.
Hmm.
Someone has to manage the acquisition, someone has to manage the asset management of the projects you've closed in the past, and there are really a lot of hats. But I think utilizing your framework is the best way I think someone can build their company with a culture as well too, right? And when I think about your
Yeah.
framework, I think about my playing days in the NFL and how I really wanted to translate some of the things that we did into the
Hmm.
world of business, because one of the things that you said was just taking on having those tough conversations. Because
Yeah.
if you really want that cult, if you really want to build a culture around greatness, like you have to have tough decisions.
That's right.
And I think that in today's world, and I don't want to say like soft because that might come off a certain way, but what I'm trying to get to is that if you really want to be great, if you really want to have a top-notch company, you need to
Yeah.
be firing on all cylinders.
Yes.
And everyone has to understand their role. When we don't need, we don't we always used to say, in sports, like we don't need you to be Superman, we just need you to be a man. And what
Hmm.
that means is that we don't need you to do, other things that get out of maybe your scope. Obviously, there are things that you have to
Yep.
do as a part of the team to be successful, but the point is you really have to understand how your job impacts the next person,
Yeah.
the next person's ability to do their job. Because if you
Yeah.
if you if you mess up and you don't do things according to how we planned it or according to the business plan, that ultimately affects the next person, which ultimately affects the entire ecosystem. And for us to really be firing on a championship level, we need to be firing on all cylinders.
That's right. And so you sparked a couple things in my mind with what you're saying, and I completely agree with you. And I think that idea of like you're taking away from your NFL experience where everyone is elite, right? Everybody's there to be a champion. You're not there if you're just wanting to like hang out, right? Like nobody there is just wanting to hang out. Everybody there wants to be the best. Um, and folks that are just there to hang out, like they get weeded out somewhere else in that process, right? And I think that's part of the fit. Like, here's something else I learned in my career is, not every so in the business world, it's not like the NFL where everybody wants to be the best. There are some people that just not everybody wants to be the CEO. Some people just want to be a manager or not even a manager, right? Because that's not what they want. And, I had a situation where I had a coaching relationship with, somebody that was under me, right, at the company. And I remember being really hard on them because I wanted them to get to the next level. I wanted them to get promoted. I'm like, these are the things you need to do. And they weren't doing them. And ultimately the person ended up leaving the company. And I was like, wow, like I'd spent so much time on them. I mean, I was thinking about on weekends, how do I coach them up? How do I coach them up? How do I get them to the next level? Well, the disconnect was they didn't want to be at the next level, right? They just didn't feel confident to say that to me because I was so adamant of like, we're going to get you promoted. Because like, that's what I always wanted, And so, but like, that's where like, I think that fit comes in. And it's like, but like my other point was if you want to, like you said, you want to have a championship firm or you want to have a top performing firm, you do have to have everybody fire on all cylinders. And so you need to set up your hiring process to figure that out. Are you okay with having people that just want to be, at a certain level and not go any higher? Or do you want to build your process to weed those people out because you want everybody to be, you want your company for everybody to have the same perspective as somebody on that NFL team. Like we all want to be great. We all want to be the best. But that's like a subset of people that want that, so you got to build that, I think, intake to figure out who are those people and who aren't those people. I think personality tests can help a lot in different things. But I think that those are a couple of things that like your comments sparked for me. Like I agree, to be a champion caliber company, everybody has to be firing on all cylinders. I think the problem is, in the world, not everybody wants to fire on all cylinders. So you got to figure out, how do you find the people that do and don't?
And that leads me into what you said about the personality test too, because that is also part of our hiring process as well, as figuring out those soft skills. Because anyone can have the technical skills, and there's certainly levels to expertise on such technical skills, but the soft skills is really what we look for, because we know if someone is a an intermediate on, let's say, video editing versus someone who is like an expert. And if the expert is lazy, if the expert is not productive, if the expert doesn't really want to better themselves, versus the intermediate person who has attention to detail, who is responsive, who wants to get better. We want the person who is the intermediate that really wants to get better, because we know that we're only as good as our weakest link. And when I think about it, I think about it like the New England Patriots. These folks, they never, go for the best guys, right? They go for the guys that have the heart. They go for the guys that want it, the guys that really know how to respond in times of adversity, because that's ultimately who you want on your team. And that's ultimately who you can get the best out of on a daily basis, because they have that intrinsic motivation. And like you said, the soft skills to get to the next level.
No, that's right. I mean, I think that if you look at success, I think there's a much higher correlation between hard work and success than there is intelligence and success, right? There's a lot of smart people aren't very successful because they don't have that drive and that motivation. And there's a lot of people who may not score the highest on the IQ test, but they're extremely successful because they've just outworked everybody else. And so I agree that work ethic is huge. In that, you want that person that is going to come in and never stop growing, right? Versus the person that, I'm an expert here and I'm done learning, I'm done trying, right? You want somebody that's hungry, it's going to come in. And so, it does. It goes down to, and it's all about how do you find, so there's, there's the right people, and then there's the right seats, right? And that's, That's a framework from a bunch of different books, but I think Traction is one of them that really talks about that, by Gino Wickman. And it's like, the way you figure out the right people, like, how do you know if you got the right person? Well, you judge it against your core values, right? So that goes back to culture in the framework, right? A big part of your culture is, what are your core values? What are the things that you strongly believe in? And that you want to bring other people, you only want to bring other people in that also strongly believe in those same core values. Because if your core values aren't aligned, it's not the right person for your company. That's not going to be the right person. It doesn't matter what seat they're in. It doesn't matter how brilliant they are. That a bad apple will ruin the batch, right? And that's totally true. And like, one person can be a cancer on an organization. And I've seen that happen over and over again, where people are just poisoning it from the inside. And that's a terrible situation. And so, you got to have the right people. You got to be clear on your core values so you can hire people that align with those core values. And then you got to get those people into the right seat. And that's what it really comes into, your org chart. And how do you create, like, you shouldn't be creating roles for the person. You need to create, I think people often try to do this, especially small companies that are scaling. They're like, man, I really like Betty, and Betty's really good at this, but like, that role doesn't really fit Betty anymore. So we're going to find something else for Betty to do. They try to create a role around a person. That doesn't work. You got to create your org chart without any names on it, right? I need somebody that can fill this role. And then you got to find the right people to put in that right seat. But you can't you can't try to fit a role around a person. I think people go wrong with that, especially because, like, the people that were with you when you were a 5-person company, a lot of those people may not be successful when you're a 50-person company. Because it could be just a different type of person, or maybe you've outgrown their skill sets. And that's just kind of a fact of how business works as the business evolves. And so I think those are extremely important. The other kind of going along all this as well, you got to know all this stuff ahead of time. So you got to be thinking way ahead of, put your org chart together. Like, I have an org chart. I have an org chart that looks 5 years out. I'm saying, in 5 years, this is what I want our org chart to look like. And I actually have it to, like, okay, here's the 2022 org chart. It's a subset of it. 2023, we're adding this. 2024, we're adding this. 2025, we're adding this, right? To get to that whole org chart. But because I have that clarity, I know, okay, in 2023, these are the positions I'm going after and hiring, and this is why, right? And then it allows you to get ahead of those things. And I think you'll be impressed when you have that type of clarity for the type of people you're looking for. Like, you'll find them. Like, you'll find them by networking, LinkedIn. You'll hear people saying, like, oh, I know this person, they're a rock star in that, whatever. It's just, with that clarity, I think you'll start to find those people. So I think getting that org chart together, getting that budget forecast together, like, knowing where you're going is extremely important. You don't want to be reactive with your growth. You want to plan your growth and then work into it, right?
Man, those were such golden nuggets there. I mean, you're kind of making me think about my own org chart and thinking about, hey, I need to go back in the lab and revamp what I'm doing, because what you're saying is completely right. And it also kind of goes into the cash flow quadrant too, from Robert Kiyosaki. You start off as a business owner and you're working in a job, or you're self-employed, you're doing everything, but the goal is to get to the I, where you're the visionary and you have a team of people who can get the job done, that can advance the organization's agenda forward. So man, this was really, really good. So let's switch into real estate. So you
Sure.
exited the company. You have this great, amazing framework. Tell us more about your investment strategy and how you were able to get your first deal done in the commercial space.
Yeah, sure. So the investment strategy, so we're focused on multifamily B and C class properties, 75 plus units throughout the Midwest. We currently have properties in Indiana, Ohio, and Kentucky. And we're continuing to expand throughout other markets in the Midwest over the next couple of years. And that's part of our growth plan, right? Like, we know which markets we want to be in, and we're starting to look at those. So, yeah, it's really, it's a syndication model where we're bringing in investors, pooling our money together, buying these value add assets where we know that there's a deficiency that we can solve, right? There's something wrong going in that we know we can solve, and we can create value, and we can get good returns for our investors. So that's really our strategy. The reason we focus on like really workforce multifamily housing is because there is such a supply and demand imbalance in this country. There's such a need for housing, and those are people that really have that need for housing. If you think about what's happened with inflation and interest rates, housing prices going through the roof, interest rates going through the roof. I mean, in Indianapolis, there's like, I want to say there is something like an $800 or $900, maybe even $1,000 now delta between like the average rent rate and the average price, the average monthly mortgage payment, right? So there's just, as housing becomes less accessible, I think quality, safe rentals are what kind of fill that space. And so that's really what we've leaned into. Um, as far as my first deal, and I think this is a great recommendation for anybody that's trying to get started. My first syndicate. Now I did a lot on my own, right? For like 3.5, 4 years. My first syndication deal was a partnership with a couple of guys that were more experienced than me. They had done, I think, 4 syndications at the time, so they'd been through the process, understood. But they were doing a bigger deal. They needed some help. So I was able to come on, help them fill some gaps. And that really got me kind of in the driver's seat, right? Got me on the sponsorship side, got me to really understand how that works. I think it's a great way for people to get started is find somebody more experienced than you and figure out how you can add value to them and then learn from them. And
No,
that was like critical to me getting started.
no, perfect. That's a perfect way to get your first deal done. That's the same thing that I used to get my first deal done as well. Was just leveraging someone else's expertise and systems. They've already done it before. You just need to find a way to add value. And
Yeah.
I completely agree with you on the affordability perspective. I think from a long-term perspective, one of the challenges in America will be affordability when
Mm-hmm.
we have prices that have skyrocketed in a residential single family space over the past 12 to 24 months. We have institutional capital that's more interested in single family rentals. Affordability is I think the new crisis in America. So if you're able to just put basic, nice product on there that is not too highly amenitized, I think there's a ton of opportunity to create wealth through real estate investing using that particular strategy.
Yeah, I agree with you. And it's an interesting point you bring up as more and more institutions focus on buying single family as rentals. What's that going to do to prices of housing, right? Because when that house is an income stream, you can pay a heck of a lot more for it than somebody that's buying it as a single family home, right? And so, I mean, I'm sure, as I know, we're moving from where I think it is something 2, maybe 5, but even as low as 2% of all single family homes were owned by institutions. And multifamily is kind of the exact opposite, right? But we're seeing that trend grow exponentially where, I mean, I know in Indianapolis here, there's been a couple companies that are buying up thousands of homes. I mean, thousands of homes a year, and turning them into rentals. And it's just, yeah, it's gonna be interesting what that does to the housing market long term.
Yeah, and I was actually just telling someone that the other day. I mean, when we start seeing more and more deals that are transacting on an NOI basis
Hmm.
versus the ordinary standard, single family valuation from a comps perspective, that's
Yeah.
going to price a lot of people out. And again, it's sad on the housing side because your average American, that is how they are able to build wealth, is through their home. But if we have institutional capital who have lower cost of capital, who have tons of money to deploy and are willing to take a lower yield, I mean, it's likely going to skyrocket. So um, again, affordability, I think if you're able to provide that option in the marketplace, there's a lot of runway to create wealth.
Yeah, it's an interesting point for sure.
So how were you able to, you got your first deal done, how are you able to scale that into 900 units today? And what were you able to translate maybe operationally, or what were the biggest lessons that you learned rather operationally that helped you scale to 900 plus units today?
Yeah, that's a good question. I think one of the things is management. So property management is I think by the most critical piece to making or breaking the success of your property and your deal, right? They're the ones that are interacting day to day with the tenants. I've worked with 4 property management companies through my time doing this. And I really struggled with some of those relationships because I found the mindset was completely different from me as the investor, like asset manager, wanting to raise rents, wanting to push revenue, wanting to get to that growth, that NOI growth, versus many times the property manager was really more focused on occupancy and actually wanting to limit rent growth. Um, because I personally think, frankly, because it's harder to rent a unit when you're raising rent, maybe 6-8% than if you're raising it 2 to 3%, right? It's harder to keep that rented. It's just frankly more work, and so I struggled a lot with that at the beginning until I found the right partner, and then once I found the right property management partner, that gave me the confidence to know that I could go out and acquire and be successful. So is that confidence. And so like when I acquire a property, I'm bringing my property management partner with me, bringing their maintenance supervisor with me, because I know that those are some of the biggest gaps I have, especially related to like property maintenance and construction. That's just not my background. I can't look at a condenser on an AC unit and be like, yeah, that's from 1994. That one's from 1980, right? But having somebody that can do that is critical. So finding that partner in a great property manager and engaging that property manager on the front end during the acquisition, and like making sure they're signing off on, here's how we're going to go about the rehab scope, right? And schedule. Here's what I think operating expenses are. Do you agree? Here's where I think rents can be. Tell me your perspective. You may not agree. You may have other comps. You're saying, no, we're going to go here, and you may have a different vision, but at least they're that great sounding board, because that property manager is going to be the one that has their fingers in the market every day dealing with people. So that was a big piece that really gave me that confidence to know that I could go out and acquire and run. I think that just made me more aggressive, being able to go after deals, because I knew we could be successful based on the program that I'd set up. So that was one big piece. I think it was just that confidence, because I knew I had a partner who could easily come in and manage, versus at times before I'm like thinking, doing the underwriting and thinking, yeah, we're going to put a bid in on this property. And I'm like, well, who's going to manage it? So I think forming that relationship ahead is probably really what's important. I think other relationships that are critical. So I guess the key to scaling is going to be relationships, is going to be the theme. I mean, the other ones that are critical, right, are you've got to have the equity. So you have to have the investor relationships, and you've got to have the debt. I think people often forget about the lender as the biggest part in the capital stack, right? And the way you get great loans is by having great lender relationships. So you got to build those relationships to be able to, and that will allow you over time to go after bigger deals, to get good terms. And so I think those pieces I think are critical to being able to really grow and grow successfully. I mean, the last one, relationship wise, is really going to be the brokers, right? Because brokers are going to provide those deals. You got to be able to build confidence in them that you can close, and that you do what you say you're going to do. Because if you can't do that, you won't grow, because you just can't get any properties.
Yeah, totally agree, man. I think a synopsis of what you've explained was just creating that system. And the big part of that is the management, because they are the first line of defense on your property, and also they are tasked with executing the business plan.
Yeah.
And
Yeah.
it's the same thing as employee retention to some respect, right? Just
Yep.
having the same manager on several properties, they already know who you are, what you like, what you want to do. They know the culture that you've established within your organization, how you want things done.
That's
And it's
right.
just a system that's just implemented from property to property.
That's
And
right.
it takes less stress off of you because you don't have to worry about maintenance. You don't have to worry about payment systems and all the little things. You can just focus on the two things that drive our business, which is ultimately raising capital and finding deals.
Yeah. Now here's, as you scale, where I hit that next plateau was, okay, when we had 2, 3, 4 properties, I could stay in touch with everything. We could have weekly calls on those properties. I could call the property manager. You get to like 9, 10 properties, that doesn't scale, right? You can't have 9, 10, 15 weekly calls, right? You got to be able to figure out, that's where asset management really came in, is that layer on top. So like, we need to get really good at what are our reporting requirements? What do we need from the property manager? How do we develop our own reporting? How do we own our reporting? How can I get instant access to the numbers I need? How do we set up a rhythm to still have those calls, but have them in a way that's scalable, right? To have those touch points to hold, because you always have to be holding your property manager accountable, right? But what I realized was a lot of the information, the burden really needed to lie on us, not on the property manager. And now the way we look at it is, I just want like the granular detail from the property manager. We put that into our system and we turn that into reports that makes sense for us, and dashboards and things that help us manage. But that was really one of those plateaus we hit where it's just like, okay, I need to get control over everything that's going on. And there's too much just to be able to think I'm going to do one-off calls and keep it figured out, right? Which you can do when you only have a couple properties.
Yeah, man, that's a great golden nuggets there. I totally agree. And that's something that people are eventually going to run into, but it just comes down to having that framework and really thinking about that stuff earlier
Mhm.
on, because you're eventually going to run into it. And if you plan on scaling into the portfolio that you have today, it's only a matter of time. So why not just kind of focus on that earlier on?
Yeah. And you're right. It's all about systems. It's all about building repeatable systems.
That's perfect. So what are your strategies today with raising capital? I'm sure 900 units, you've had to raise a ton of capital to get to that level. Give us a little bit context of, how you're able to raise that capital today.
Yeah. I mean, I think at this point I've raised oh, 25 million over the past few years. And I think so one is my podcast. My podcast has been a great way to just find people that are interested in investing and just teach them about how to be a good investor. And then people, will come to my website and they'll fill out the form to get on our list and learn about our deals. So that's been a great way to just build one to many relationships, where the cool thing about that is, like, when I'm sleeping, somebody in LA can be listening to the podcast and start to build that relationship with me, right? Figure out who I am and what I'm about, and see if I'm somebody that they jive with, right? So it's like, you talk about, like, with sales or anything, they have to know you, like you, and trust you, right? So I found that the podcast and just other forms of content, social media, other videos, is a great way for people to start to, at a minimum, know me, hopefully like me. And then over time, start to build trust because they agree with the things I'm saying. We have that we're like-minded, right? We have that in common. So that's been great. I host a monthly meetup in Indianapolis for real estate investors, right? So it's like, networking and creating these communities is the way that you can effectively raise capital at scale. You can only have so many one-on-one conversations. So, like, early in my career, pre-COVID, I was going to like 10, 12 conferences a year because I was meeting investors there, right? And that's how I was generating investors. Well, that's a tough thing to do. And you can only have so many, again, one-on-one conversations. So one-on-one conversations are fantastic to deepen the relationship. And I still talk to every single investor one-on-one, but you got to have, like, the funnel above that to bring people in and bring people to you, right? Because and that's really like that was a benefit of COVID. Like if you look at all the bad things, like a positive to me during COVID was it forced me to start a podcast. That was my COVID project. And through that, the podcast has totally changed my business.
That's great. When I think about that story, really it's not raising capital, it's attracting capital, because we're not raising capital for some new business. I mean, real estate has been out since since the world
Yeah.
was invented, right? And we know
Yeah.
that real estate provides good cash flow, generational wealth, and tax benefits. And so what we're just doing is just sharing our journey and our
Yep.
expertise, and educating and helping people get into real estate and attracting that capital, because
That's
we're
right.
simply just trying to provide an opportunity and just educate people who are interested in getting into real estate.
That's right. I mean, I view it as my mission is to help as many people get invested in real estate as possible because I believe that by investing in real estate, they're going to have a better financial future. Right. I mean, we've seen it over and over again, millions of times, like you said, throughout history. Um, and if you look at right now, the richest people in the world, the most advanced investing organizations, I mean, a lot of their allocations to real estate is somewhere between 20 and 40%. Then you ask the average person, well, what's your allocation to real estate? And the first thing they say is, well, what do you mean by allocation? And then the second thing is, well, zero, right? All their money is in mutual funds and things in their 401k for the most part. And so, at a minimum, it's about diversification because diversification is the only way that you can truly lower your risk among your investments is by diversifying. And so it's not that you should be 100% real estate, but you should be some in real estate because it provides a great base for your investment portfolio. And then beyond that, it actually can provide great returns if you do it in the right way. Right. And so I believe, I mean, real estate investing has significantly changed my financial situation and my life. And so I want other people to do that. And unfortunately, real estate just isn't marketed like the other financial products are, right? The 401ks and things that are pushed by your employer and everybody else. And so absolutely. And then what you said about capital, like I view it as it's leading through education. I don't have to sell people because if I educate people in the same way that I was educated, that light bulb is going to go on and they're going to say like, yes, that's something I should do. And so it's just about spreading the message so that people can hear the information and can learn about it because there's just not a lot of avenues in your day-to-day life to learn. Excuse me.
Oh, 100% agree. 100% agree. It brings me to a story when someone was showing me about Reonomy back in the day, I think a couple of years ago. The first thing
Yeah.
that they did was they showed me Jerry Jones's portfolio, which is the owner for the Dallas Cowboys, and he had a huge portfolio. And recently I was talking to the CPA for the Minnesota Vikings, and they have a huge portfolio. But the point is that a lot of these multimillionaires and billionaires, rather, their foundation is real estate. They might have invested in other businesses that they also have been successful in, but it comes down to, are you building a core foundation? And if your foundation is just based off of stocks, then you're likely more susceptible to economic swings.
Like you're hurting
And
right now, right? If you're all in stocks, like you're feeling pretty bad about this year. Like the reason that I can sleep well at night is because, I'm only about 20 to 25% in stocks, and so I can take that hit. Be like, okay, well, that's all right. And what's cool is if stocks are down, take some winnings from over here and put that into a down market, right? That's how you really win is by being able to like buy low, sell high, right? Like that's and being able to move assets and change your allocations and things. And so yeah, like if you're 100% in stocks, like that's just, you never want all your eggs in one basket, right? Like I think everybody can agree to that, I think. And that's ultimately, I think, the basis of how you should think about this is that as you're building out your investment portfolio.
yeah, I totally understand, man. Totally agree with that 100%. So you've been on an interesting journey from exiting a company, getting into real estate, building your framework. If you had to start this marathon all over again, what would you do differently that you think would contribute to your success?
Man, I would start buying real estate a heck of a lot earlier. I would I would honestly go back to when I was in college, and well, I didn't have the dough in college, so I wouldn't buy it in college. But as soon as I got that first job, I'd be looking to buy that duplex I can live in and I can house hack. And if I had the dough in college, or if my parents did, I would have bought a rental in my college town, and had my roommates pay my mortgage. Like that's the way that you really trip the system and really get ahead of this, because that's going to be your largest expense, right? It's going to be your mortgage or rent typically. And if you can get other people to pay it for you, your financial situation is going to be totally different, even if you're like fresh out of school with a new job, right? So yeah, I would have started investing in real estate like 15 years earlier.
Yeah, man, it just kind of brought me back to to a story.
Mm.
I probably would have wholesaled just, when I was in college playing football, I probably would have wholesaled now that I'm thinking
Yeah.
about it, because I was doing things like Amway. I mean, I did
Yeah.
Cutco back in the day, and
Yeah. Yeah.
things just didn't work out. But I think now that I'm thinking about it, man, I think I would have like wholesaled a little bit.
Yeah.
And I
I
think
mean,
with my hustle and my
definitely.
tenacity, I think I would have made a couple of dollars.
Definitely. I mean, people talk about hustling and all these different things. I mean, wholesaling is a great way. Like if you've got drive and ambition and you don't have a lot of money, wholesaling is a great way to get started. You
Totally
know?
agree, man. Yeah.
I mean, yeah. And then just don't stay in it forever. Move on to owning long-term assets, right? And building equity. But it's a great way, like that and flips are a great way to build up cash to then go invest in buildings that you can own,
Yeah.
whether
It
they're
comes down
short-term
comes
rentals,
down to
long-term
ownership.
rentals, whatever.
Yeah, comes down to ownership, man. That's really how you create wealth.
That's right.
So tell us a little bit more about, or tell us about Hudson Investing and what you have going on.
Yeah, sure. So, I mean, we talked a little bit about the strategy before, but we're buying undervalued properties in outperforming markets throughout the Midwest, right? And the goal is to scale, and scale substantially to the point that in 5 years we're buying 500 million in assets a year, and we've built out to that point $1 billion portfolio that we can leverage the scale on to improve the outcomes of all of our properties. And I mean, it really comes down to creating economies of scale in this business. And so that's why I think aggressive growth is, I mean, I say aggressive growth, but like responsible kind of aggressive growth. Like we're not buying deals that aren't going to perform. It all comes down to the numbers. And for me, I'm a cash flow first investor. So like it's got a cash flow, but growing as we can and not shying away because, for example, all the bad news that's going on right now in the world, right? That's a lot of headlines. Fundamentally, real estate, and as we talked about multifamily, we talked about the imbalance between supply and demand, right? Those fundamentals haven't changed. They're not changing anytime soon. So my hope is over the next couple of years, there's some good buying opportunities as interest rates go up temporarily, and hopefully we see some prices compress. So we're out there buying. That's what we're looking to do. And grow the portfolio and really be a premier firm that owns real estate throughout the Midwest and allows people to diversify. Even if they're in real estate, a lot of people are heavily diversified in like the Sun Belt or out west. We want to be that option for you to get into the Midwest and get some stable cash flowing assets. That's really what we're all about. And we're building a team that is really focused on creating a community of investors. Just hired an investor experience manager who her sole job is to create a community among our investors and really make it feel like a place that you can be proud to be a part of, right? Like I use the analogy of like, okay, car manufacturers, right? You have like GM and Ford over here. You have like Ferrari, Tesla, let's even throw Jeep in there over here, right? Well, what's the difference? Well, these cars are a commodity and people buy them, but they don't create avid fans. Ferrari, Tesla, Jeep, like these are avid fans of these brands that go to events and follow them around and are advocates. And like, that's what we want to be for our investors. We want to create that community that everybody can be proud of.
Yeah, that's really great, man. And I always like to say cash flow, cash flow, cash flow, cash flow today to live the life on your own terms and have that financial freedom, and then generational wealth tomorrow that you can pass on for people that are coming after you. So you have a website called Hudson Investing, right?
Yeah,
HudsonInvesting.com.
HudsonInvesting.com. Folks can go check it out, learn more about us, who we are, learn about my team, learn about our strategy, and sign up if you'd like to get on our investor list and see future deals as they come out.
That's perfect. So Kent, if our listeners want to get in touch with you and follow up with you with what you're doing and just stay in the loop with your company, can they reach out to you? What's the best way for them to stay in contact?
Yeah, so going to Hudson Investing and signing up is the best way. You can also sign up for our newsletter there that we're sending out. Second would be listen to the podcast. It's called Ritter on Real Estate. It's anywhere you listen to podcasts. And then third would be social media. So it's at Ritter on Real Estate on Instagram and in most channels, LinkedIn, Kent Ritter. So you can find me wherever you feel most comfortable.
That's perfect. Well, Ken, thank you so much for being a guest on our show today. We talked in depth about how to build a company, your experience from building companies, transitioning into real estate, leveraging that framework into real estate, your scaling plan in real estate. This was a really, really good show, and I'm super excited and glad that we were able to share it with the listeners today. So thank you for being on our show. Thank you for our listeners again today for tuning into another episode of the Mogul Marathon Real Estate Podcast. Let's take action and be great today. And remember that real estate is a marathon, not a sprint. Run your own race. Thanks again, Kent.
Thanks.